Day 15. So we're going to talk about the reality of building equity in today's property investing market. So what we can do is we can dwell on the past and we can say that it's too hard. And you'll be right. Look, in the past, go back 10, 20, 30, 40 years for property investors, it was a lot easier to build up a big portfolio than it is today. We're talking about ratios of average income to property values being around a third, and now values are closer to about a tenth. So if your income was combined 100k, the property values were about 300k, now they're up around 1 million. So it is a lot more expensive to buy property than it used to be. There's LVR restrictions that are getting in the way, whereas those restrictions weren't really in place back in the day. And there's a lot more competition. The demand is far outweighing the supply, and it seems to be getting harder every day. Or instead of taking that approach of blaming and feeling sorry for ourselves, we can just accept the situation as it is, and we can figure out, okay, if we do want to earn millions of dollars and profit from property investing, then what can we do and how can we do it? There's three kind of broad categories. There's adding value, spotting value, and bringing value. And you've got to stop thinking about property investing as a solo player game, especially when prices are, in that ratio of being 1 to 10 of income and value. And you've got to start getting a little bit more detailed than you would have had to 20, 30 years ago. If you bought anything 20, 30 years ago and you had it valued now, then you're going to have made a lot of equity. But that today might not be the same case. So if we look at them one by one, adding value. How can you add value so that you are going to be building up equity in a fashion that is quick enough that you're going to stay interested? So we touched on this in the first video. Those 3 C's is really important. Adding value is going to build up your equity. You can do that through renovations. You can split cross leases. You can focus on increasing the yield, and all of these things are going to make the values go up by 10 to 40% within short periods of time. If you buy something that is a bit run down and you give it a new lease on life, as long as you don't spend too much money, then you're going to be building equity. Now, adding value is the simplest form of arbitrage to building equity in the property investing game. The next level is spotting value. Now, spotting value is your typical property investor person on the street, your mum and dad at the barbecue. They're not necessarily going to be able to understand or spot development or subdivision potential properties. And if you just spend 10, 20 hours researching about developments and subdivisions, you're going to have a lot more knowledge than most people, and you can start feeling more confident about going and tendering or putting down offers on properties that have potential for development and subdivision. The return on your cash is going to be 20 to 35% in these areas on average, and the property developers in the space are running their projects thinking about margins on their cash like that. So even if you're only half as good, there still should be enough fat for you, as long as you're not overpaying, that you're going to get returns. And without doing any development or subdivision, it's very, very, very hard to build equity quickly in the property game. Now, another area where you can spot value is when there's mortgagee sales or quick sales required. So if you see that a listing that says seller must sell 4-week period, like something's going to auction and it's going to sell no matter what, there are going to be auctions and sales of property that sell below their average, what their market value should be, because that seller is forced by outside circumstances to this specific property to take action quickly. And if you know how to find those deals, then you can spot the value. It can build equity much faster. And yields is another area where if you can understand yields based on like some of this other stuff put together, then you might see something that is on the street side only viewed as maybe a 3-bedroom property and there's not that much potential, but if you can see a way to get the yield way up, then you are actually spotting value that other people haven't recognized. You're able to potentially pay a bit more because you're recognizing that real return is going to be higher. Now, the third level of value creation to be building equity is to bring value to property deals, and specifically I'm thinking about in joint ventures or where there might be a group of you involved either completing a transaction or middle-manning a transaction. So some examples of bringing value to a deal is finance and capital expertise, or even having the capital. So if you have $1 million sitting in your bank account ready to deploy into property investments, you should be able to bring that specific value to other investors that have capital deployed, and you have good negotiation power and good ability to be first in line to be building equity. Somebody might be really good at spotting these developments and subdivisions, but they have no capital. If you have the capital, you can say, look, I want 25% return on my cash, and we'll split 50-50, anything above that 25%. If somebody's really good at finding development properties, getting them under contract, getting deals done, they can do really well out of it, and so can you. Now, bringing value, maybe you're handy with DIY, or you've got construction contacts or expertise. You can bring a lot of value to a group of investors by putting your hand up and saying, I'm going to manage and complete this renovation on our behalf. Speed is valuable. So if you're able to do transactions quickly, or you're able to get things under contract quickly, especially before anyone else, that is bringing value to the equation. And if you, and that's me talking about specific deals as well. So if you have a property under contract that is a good deal, then you are going to create and build equity for yourself. If you can settle, you just need to find this missing piece. If you have good deals and good properties under contract, then you should be able to find the money to get those properties settled and create an arrangement, or create an agreement where you're getting some of the action, even if you're not putting in much of the money. So you do need to be creative in today's market to build up equity. Now, you can't just say I'm going to buy a property every 5 years and hope that everything works out. If you really want to create like true wealth through property investing, you're probably going to buy 1 or 2 properties. You're going to get close to being fully leveraged, or safely anyway, and then you're going to have to start thinking about these other things. So there's a lot more to it. Any questions about building equity or adding value, let us know below.